Hi everyone, Basil Chapman here, sitting in for Tommy O'Brien. This is the Tom O'Brien Show, and since we've got Tim Ward coming up, I'm quite excited about this because for subscribers, we still have a small core position in our gold and silver, and I was looking at those charts, and I'm just really wanting to hear what Tim Ward has to say. Tim, how are you?
Good, good. I thought we might cover the S&Ps first, if that's okay.
Just real quickly, could you please tell the listeners how to reach you?
Yeah, my email is tim@ord-oracle.com. My website is www.ord-oracle.com. That's pretty much how you get me. So either email me or go to my website. So been in business for a long time, since I think started the Oracle back in 1990s. So seeing the ups and downs of all markets. So, but anyhow, let's get back to the markets here, if you don't mind, and we'll take a look at the.
Sure, let's go fire away.
All right, yeah. So this is the S&Ps. And this is the daily S&Ps. I got the bottom window is the daily, and the top window is the daily SPX VIX ratio. And I want to point out, we actually been staying along for quite a long time, and I thought we might start breaking out to the upside, but what I'm starting to see is something else here. But this is kind of a last bullish signal. The Bollinger Band is there's an upper Bollinger Band and a lower Bollinger Band, and there's a mid Bollinger Band. The mid Bollinger Band, and more or less, it's a 20-day average, or it's on a weekly, it's a 20-week average, on a monthly, it's a 20-month average. And you get too far from the 20-week or 20-day, 20-week or 20-month average, like two standard deviations, which is the upper Bollinger Band, the lower Bollinger Band. The market is too stretched in that direction, and it'll snap back at least back to the mid Bollinger Band, and sometimes goes all the way back up to the higher Bollinger Band. What I'm pointing out here is last Thursday we hit the lower Bollinger. We actually closed below the lower Bollinger Band right here, and also the SPX VIX ratio, Bollinger Band's on it too, did the same thing. And I marked with these pink areas, pink circles, all the times where both the SPY and the SPX VIX ratio close below their lower Bollinger Bands. And you can see what happens. You just snap back up, and you at least get back to the mid Bollinger Band. Sometimes you get above it. So anyhow, that was the bicycle. Normally, when you break the lower Bollinger Band, a lot of times you go on and make an attempt to break the upper Bollinger Band. And I think we're in the process of doing that right now. This is the weekly SPY, and down here is the weekly SPX VIX ratio. And so now we're on the weekly time frame. I think we're maybe may test the upper Bollinger Band. And previous times we did that, which is here, and here. The market's too stretched again, and a lot of times you get consolidations. And I'm thinking we're going to go make an attempt to test the upper Bollinger Band, which comes in, the upper Bollinger Band is 104, or 704, excuse me, on the SPY. So up around 700 plus is going to be resistance because it's hitting the upper Bollinger Band. And if you notice, this is the bottom window is the SPX VIX ratio. And normally when you're hitting new highs, the last time we hit new highs was here, didn't hit much new highs, but you did hit higher highs. This ratio hit lower highs, and that's a bearish divergence. We had one right here too. You hit a new high, and the market put a retracement. Here we're pretty much setting on the highs. We may be breaking out highs or really setting on them right now. And if you notice, we got a big divergence going on in the SPX ratio. When both of them are hitting new highs, that's a bullish continuation move, suggests market's going to move higher. When the SP is making higher highs and the SPX ratio is making lower highs, that's that divergence. So we have a potential for a setup for a divergence. And if we do hit the SPY up against the upper Bollinger Band, and the SPX ratio fails to make a new high, which most likely it won't, I'll probably end up with a sell signal. So that's what I'm kind of looking for. So if we anyhow, around 700, 705 area on the SPY is an area where potential I could end up with a sell signal. How big of a sell signal, I don't know, but we'll at least get some sort of a pullback. We do have a seasonality period that turns bearish around mid-month. That gets starting anywhere from the 15th to the 20th. So this week should be an up week. Next week, maybe a topping week. So that's what I'm kind of looking for on that scenario. So I'm still long as right now. So let's flip over to the gold market. That's everybody. That's where the money is going to be made, I think, over the next 12 months. But this chart goes back to 2014. You can't read it up here, but it's a bullish percent index for the gold miners index / GDX. So it's a ratio. Here it is, right here. It's a weekly time frame. So it goes back 22 years, or actually 12 years, and shows all the times when the bullish percent index for the gold miners index / GDX weekly. And the top window is the RSI for that ratio gets below 25, which it did last week. I think it hit 23 something. Now it's bouncing off. And also, it's a kind of a double indicator. Anything gets below 1, that's why I put this area in green, is a bullish area. So that when it gets below 1, it shows the valuation's good. When the RSI gets below 25, it shows pretty much an exhaustion to the downside. So this indicator is actually giving a buy signal right now. And I marked with all the blue lines going back to, here's all these blue lines are times when the ratio got in the green area and the RSI got below 25, and all of them picked out lows pretty good. So we're on a kind of a bicycle. Now this is a bigger bicycle. The market actually still can flip sideways. Back in 2018 kind of went sideways before it started going up. 2015 there was a bicycle, kind of went sideways. Well, I'm thinking we're not going to go down, so either we're going to go up or sideways. And I'm thinking what may happen here is another indicator. This is a kind of measures, this indicator measures the strength of GDX. All right, I hear the music.
Yes, good. Wow, we've got a lot of information. We're looking forward to your follow-up. We'll be back with Tim Ward in a moment. Basil Chapman sitting in for Tommy O'Brien. This is the Tom O'Brien Show. Dow's up 105, S&P's down 13. We'll be right back. Hi everyone, Basil Chapman sitting in for Tommy O'Brien. This is the Tom O'Brien Show. We're in the middle of interviewing with Tim Ward. I just wanted to mention that, Tim, I had a question, just a brief question. Do you see a slight disparity between the chart pattern of silver and gold? Does it make any difference? And I don't want you to spend any time that you don't want to. I just thought it's a question that I personally would like to know the answer to.
Actually, I don't have that chart from me. I kind of look at it, and silver's way outperformed gold. The ratio has, and the last time I looked at it, which is at least a week ago, it would say probably some softness in silver because silver's, relatively speaking, has gone up too fast compared to the price of gold. And a lot of times you get a consolidation, but I don't know. That was a week ago. And I haven't looked at it since.
Okay, I just thought I'd mention, but you go ahead, please. I'd like to hear what you have to say.
All right. This actually measures, the bottom window is GDX up, down volume percent, so it measures all the stocks that are in GDX. GDX is an ETF. I think there's, 30 or 31 stocks in GDX. And this measures all the up and down volumes of all those stocks in GDX. The next higher window, this one up here, is the advanced decline stocks, and advanced decline measures it up down volume. So anyhow, it measures the health of GDX. So if you got more up volume than down volume, that's bullish. You got more stocks up than down, that's bullish. And I put these are 50-day averages of and this one is too. It's 50-day average. So it takes a longer term. It's 2.5 months of data. And so as long as those two indicators are above this red line, it's in bullish formation, I guess you might call it. And all that blue area are times when both those indicators are above zero. So, and that's basically says that we're in a healthy market. This thing, these two indicators give a buy signal. Looks like about early 2025, and it still remains in the blue area. Both indicators are still above zero, and that's the reason why this area so far is blue, and that's what happens in uptrend. You can have consolidations because that thing we had back in March of last year didn't really affect this graph. So it takes on a larger view. You can have consolidations, but not a downtrend. So this chart says this market's in an uptrend, and all the white areas are when both those indicators are below zero, and so that's where the big downtrends come. And so we're in a bull market. These both indicators are bullish. Having said that, we'll go on to the next chart. What I want to point out, this is the monthly GDX. On top window there, so the chart goes back to 2015, and this is a Bollinger Band again, and this is GDX, and you get above the upper Bollinger Band, market stretch, and for GDX, anything about 80% above the upper Bollinger Band, or the trading range open and close, 80% of that trading range is above the upper Bollinger Band. Normally you get consolidations, and last month we got way above it, and we came back down, and now we're trying to make an attempt, probably retest the previous high, which is up around 113 on GDX. And if we do get there this month, which I think we will, if you can't quite tell it, but 80% of the trading range will be above the upper Bollinger Band. So that suggests we'll get a consolidation, not probably like we had back here, where we went down for years. And this one here, we went sideways for years. But I do think we're going to flip sideways. So what's that mean and what's it look like? Well, here's a sideways pattern. I think what's going to happen. So this is that last month is this is a weekly chart. So we had a great big candlestick pattern called a bearish engulfing, and it opened above the previous month and closed below the previous month. So this is a weekly time frame. So this is a weekly time. So this is end of January. Last week of January, you popped up above the previous week and you closed below it. And if you notice, that volume's huge. To get through the previous low this is a selling climax. If you look at the volume compared to the previous month, you're over double. And that, when you get that big of a surge in volume, it pretty much just stops the market, either up and down. So it's just exhaust the move to the downside because you got a selling climax going. So you go down and test the selling climax, and you do so on 10% lighter volume. If you notice here, there's about 30% lighter volume. So the previous low is support. So if you can't go through the previous low, what the market will do, attempt to take out the previous high. Well, the previous high is also that last week in January, and that's where we're probably going to head. And that's up around 115. When I did this chart, we're 102, probably, or 113. I think that last high was, and
113.50. So right.
Yeah, 113. So that's probably where we're heading. And to get through that high, you need equal or greater volume to get through the previous high. That ain't going to happen. You're going to go up there and probably, be less than 250 million shares. And that's going to find resistance. So you can't get through the previous high. What are you going to do? You're going to go back down previous low. That's the reason why I think what's going to establish here is a trading range. And the bottom's already in. The decline's already happened. You had a selling climax. You had a test of it. Can't take it out. Now you going to attempt to take out the previous high, which is, if it does, the volume's going to have to get up around 250 million shares. That's unlikely, so it's probably going to fall right back down again. So we're probably in a trading range, and the market's going to do fine. But we had a lot of these big gold stocks, Newmont Mining, Baraka, anyhow, all the big gold mining stocks.
Agnico, Eagle, right? Yep.
Yeah, all of them had huge runs to the upside, and they're not just going to keep running forever. They're going to hit a consolidation sometime, and I bet they're going to hit a consolidation. We're actually have started a consolidation right now, according to this chart. But we'll bounce up, we'll bounce down, and we'll just build a sideways trading range. So not a top of any consequence because we've already seen the low, but we're going to probably retest the high, and I don't think we got enough volume to get through that high. So we're just going to bang around between 113 to I think 92 or 93. And how long? It could be several weeks. It could be several months. Don't know, but. One last chart, because we got a minute to go here. This is the daily GDX. And the reason why this is this area in here is all green, because I showed the 18-day, or I showed the 50-day average of the up-down volume, and I showed the 50-day average of advanced decline on the previous chart. So that's 2.5 months of trading. These two charts are 18-day average. So it's over 3 weeks of trading. And the reason why it's green, both those indicators are above -10. This works best on this two indicators. And anything above 10, you're in an uptrend. And that's the reason why this is green. Same scenario. I think we're just going to go up, hit a top, and bang back down. So a trading range is probably developing here.
Wow, Tim, you covered a tremendous amount. Thank you so much. That was so informative. I think everyone appreciates that. So you have yourself, what is today? Today's Tuesday. You have yourself a good week, and I'm sure Tommy will be with you on Thursday. And thank you very much for that information. Don't forget, folks, Tim Ord, Oracle, and you'll be back Thursday.
All right, thank you.